summertime officially, right? So people are busy, people are traveling, people are out and about, which is all good. But we are back this Thursday. I'm like, what day is it? Before we hopped
Thursday.
on live, I was like, what time is it? What day is it?
Yeah,
Good
good
evening, good
evening.
morning, good afternoon. But we are
Uh,
back. And for anyone that's watching and don't know who I am, I'm Alfyn, your local realtor here in Reno and Sparks. And today I'm joined by one of my favorite lenders, is Jeremiah with Guild Mortgage. And Jeremiah, go ahead and introduce yourself.
yeah, that's me, Jeremiah Eck with Guild Mortgage in Reno, Nevada.
Yay! Okay. So last time we hopped on here, we talked about VA loan and the benefits of it. But I feel like
Mhm.
there is a lot of terms, so we're gonna continue on with talking about the VA loan. So if you have any questions or you know someone that's a VA and that's looking to buy soon, um, you know, let us know. Tag them below. This could definitely be beneficial for them for sure.
Yeah, I
Um,
agree.
yeah. And then I know a lot of people may think, is a VA loan really worth it?
Yeah,
So, Jeremiah, what do you think? What
yeah,
exactly is a VA loan?
I would say, well, like a couple things, right? So, like, is a VA loan worth it? Yeah, most of the time it is. And then what is it? It's just a loan that the veterans who have served our country, right, have access to. And so basically, the VA says after you finished your time in the military or whatever it is, right, then you can have access to the VA loan benefit, which is really, really great in a lot of ways because you can get in with no down payment, which is amazing, right? So you don't have to come in with anything down. There are closing costs, right? People forget that even though it is a VA loan or a USDA loan or something like that, you don't have to pay the closing costs because you do, right? Like you still have your
Yep.
credit report fee and there's still an appraisal and there's still taxes and insurance and title fees and blah, 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 blah. So there's
Yeah.
strategies for that, right?
Oh,
Um,
absolutely.
Yeah. So you can work those pieces out, but the biggest thing is that you don't have to come in with the down payment and then there's no mortgage insurance, right? So your payment is just the mortgage, taxes, and insurance for the property, which is really, really amazing.
So, you mentioned a couple of things. So, seller credit, how
Yeah.
much typically are you seeing seller credit run for?
Well, the maximum that the VA allows is up to 4%. So the VA says that the seller can give you, as the veteran, the buyer, up to 4% of the purchase price to cover your closing costs, which can include, the cost that a rate interest, costs to buy down, right? Like however much that is, or all of your closing costs and all those things.
So, and then you mentioned closing costs as far as like the fees. Like I know
Mhm.
with the VA, there's typical things that you can pay off with a VA loan using the seller credits, right? What
Yeah.
are some of those things?
Yeah, VA is also really, really amazing in the sense that you don't have to follow all of the normal guidelines for debt payoff. So the VA will allow the seller to not contribute towards a down payment, but the seller can also pay the veteran's debt. So if the veteran needs credit cards to be paid off or an auto loan or student loans, we can technically use a seller credit to pay for those costs.
I love that. So, I
It's
hope,
amazing.
that's sitting in with a couple people because I know I've helped
Yeah.
a client before where it kind of reset their life by using
Mhm.
those credits to pay off debt. And then it feels like you're lighter, because all these debt was lifted away due to this. So it's amazing.
Yeah. It
Yeah.
is. It
Right.
is.
And I'm sure you've had scenarios and stories that's helped a veteran pay
Oh,
off some
yeah.
debt and start over, it seems like, right?
Yeah, because you have to think, right? Like, let's say you do get a 3% seller credit from the seller. And then we look at the debt and we look at the closing costs, right? And then maybe you have the money for the closing costs, or maybe you use a down payment assistance program for your closing costs, because a lot of people don't know you can do that, right? Your down payment assistance programs for VA and USDA loans don't just have to pay for a down payment, they can pay for your closing costs too, right? So if you get that covered and then you have a seller credit, maybe you use the seller credit to pay off some of the debt that you have. So then you're starting your new life, like you said, happier and lighter and more prepared.
And that's awesome. Like let's give an example. If we had a 500,000 dollar property, and you were able to do up to the 4%, or let's just say even say 3%, and
Yeah,
that 3% you use to pay off some debt. So let's calculate a little bit.
that's 15 grand, right?
Yeah, that's a lot.
Yeah.
But we can negotiate higher if you need more, because typically an average person have maybe $10,000 in just credit card, right, alone. So
Yeah.
if we can negotiate more for you, then hey, 15,000, 20,000 is still something. It's a lot.
It's not nothing.
Yeah, exactly, exactly. So if you have a veteran, we want to look at options. You want to pay off some debt, start kind of new with things. There's options for you. Um,
Yeah.
One other thing, Jeremiah, you mentioned about mortgage insurance. So what does that mean? How does that look like? About how much does it cost?
Yeah, so on FHA loans and conventional loans, right, you typically will always have mortgage insurance. And
Mm.
that's just simply a fee to cover the loan in the event that you default on it, right? And it's mandatory for FHA, and on conventional goes away if you have 20% or more down. But on VA loans, the VA is insuring the loan, meaning that they don't require then additional mortgage insurance, right? So when you take out a VA loan, they give you a certain percentage, and it typically is a dollar amount, right? That they'll cover, right, for that mortgage. And then in the future, if you want to buy another house, you can use another percentage of the VA loan benefit and get away with no mortgage insurance again, kind of thing, right? So that's the idea behind it. Since the VA is protecting it, they don't require additional fees for it.
Yeah, so that's a big thing. Like a VA loan,
Huge,
it's
yeah.
pretty much insured. So it's amazing. And then how much typically, like maybe 200 a month you're saving?
Yeah, I would say it's probably like 150 to $250 a month most of the time for mortgage
Yeah.
insurance. So that's a big
Still big
savings.
difference. Yeah, you can use that for your utilities, other things. It makes a difference for sure.
It does.
So for anyone that's watching, here's some really really key benefits of having a VA loan. And
Yeah,
then now let's talk about who can qualify. I think a lot of
veterans.
people assume that it's only people that are currently serving, right? So,
Correct.
for people that are wanting to take advantage of the VA loan, like if you're married, your girlfriend, boyfriend, like what are the qualifications for that?
Yeah, so it gets a little nitty-gritty, right? But if you serve enough time in the VA, and we'll just say the VA, and we'll just say that encompasses all government, whatever it might qualify for, right? Then you get a certificate of eligibility, which then says that here it is, this is what you served in, and this is what you qualify for. And so we use that as lenders to submit to the VA as proof, right, that we can qualify for VA loan. The VA won't let us close the loan without that document. So it's really, really, really important, right? So if we think of who can qualify for it, the VA says that typically to come in with that 0% down, then you can be a married or individual person, right? So you can't get in with like your girlfriend or your boyfriend with 0% down. The
Mm.
VA does allow it if you are not married, but you have to pay half of the insurance essentially, which is 12.5% down. So then you have to wonder, does it make sense, right, for us to come in with a bigger down payment just because we're not married? So that's why you'll hear a lot of people say that you have to be married to go on a VA loan, but technically you can do it with a down payment. And you don't have to be currently serving. Once you have that benefit, it's for the rest of your life, which is really, really amazing. It never goes away.
Yes, I love that. I wonder who's calling me. Look, it says maybe Alfyn. Weird.
You're calling
But with an
yourself
IN. Look, someone's calling. Wait, wait, wait.
ALFIN.
Who's that? Who's an
Who
Alfyn
is
here?
Alfine?
Who's Alfyn? Who's calling me?
Alfine. Uh, and I think the biggest thing too to remember is you don't have to have great credit, right? So you only need a 580 to a 620, and those are the parameters for VA.
That's another big one because I've talked to a couple of VA and they're like, I'm working on my credit. I don't have good credit. But the thing is, the first thing is just talk to a lender. and see what you can
Hmm.
qualify for, because people are waiting to get into like a 670, say 80, 680 credit score when you could get in now. The biggest thing is get
Hmm.
in the game, and then you can adjust and work on stuff when you're in, because while time is passing, the prices of the homes increases. So are you really winning at that point, you know?
Yeah, exactly, right?
Yeah.
So, it's really important to remember that, you know, all of these things are meant to benefit the veteran, right? So, like, after World War II is when the VA loan basically was created because all these people came back from war and they needed to find homes, and that's how the VA structured it as a benefit to them. So, once you get that, like I said, it's for the rest of your life. You can have multiple VA loans. It's
Hmm.
also the most lenient on debt to income ratios and housing ratios and how they look at your assets and income and all these things. So it's really, really a great tool. And if you're a veteran wondering if you qualify for it, it's super easy. We just literally put your social and birth year in, and then the VA populates this thing, and then it tells us basically yes or no.
Yes, and one other thing besides the credit you mentioned, starting at 580, you mentioned debt to income. What does that mean for our veteran buyers, with debt to income, and which, a lot of us just throw the DTI.
The
And this is what it
DTI.
means. Go ahead and explain a little bit more about what that means for our veterans.
Yeah, no, I appreciate you saying that too, because your debt to income is basically how lenders figure out how much you qualify for. There's two ratios we look at, and that's number one, how much the mortgage payment is going to be relative to your income in a percentage, and then how much the mortgage payment plus the debt you have related to your income as a percentage. Right. So each loan has different parameters for it, and the VA has the loosest. So they'll say, you can have higher ratios, meaning higher debts and higher payments on the loan, as long as, maybe the credit is strong and you've got money saved or not, or whatever it is, right? The VA is very open to it.
And that's another thing that blows my mind. I'm like, it's amazing. The debt to income requirements for VAs is great.
Yeah, yeah, they're very loose. So you can qualify for the most usually. You don't have to come in with any money, right? You only need a 580 to a 620 score.
Hmm.
And there's no down payment, like I said, and no mortgage insurance. It's really a great, awesome tool.
And then another thing, like another myth that some people may say is that, hey, the seller won't accept VA offers. What are your thoughts on
Mhm.
that?
Yeah, there is a thing in the real estate world, right? And I'm sure you will agree with me that on FHA and VA loans, right, that there's all these extra rules that we have to make sure that we're aware of, with the condition of the home and the age and all these things. And that's just overall true to a degree, but not really, right? Like the VA,
Mhm.
just think of it like on a normal loan, let's just say like a conventional loan, they look at it and they say, oh, it looks good. But on a VA or FHA loan, they might like kneel down and look at the baseboards, right? Like they just look a little bit closer at things. But that's not necessarily a negative, right? Overall, if we think that they're just being thorough, but it does make it more difficult sometimes if you are working with different people, right? Different lenders, even, and different real estate agents and title people that just don't believe that it's easier because it's not super hard most of the time. Wouldn't you
Absolutely.
agree?
Oh yeah, and then those things are there for the veteran, for the benefit of
Yeah.
the veteran, making sure that the home is safe for you. But what I love about it is that as long as you have a strong lender and agent by your
Mhm.
side, they'll be able to suggest or recommend, things like, okay, we're walking into this property, there's just a lot of things going on. Hey, just a suggestion, we can go through inspections, however, this may pass, this may not. We can take a proactive approach to this so that it does pass if you really do love this home, like things like that. That's why having a strong agent matters, especially when it comes to a VA loan, uh, VA client. That way, when we're walking the property, we're actually looking at the structure, make sure it's safe and good for the client so that it passes appraisal, and also, making sure keeping an eye on that clear pest.
The clear pest.
The clear path, the clear path, like what would hinder the sale. Exactly, right? Because hey, maybe there's
Yeah.
a fence hitting the home, or stuff like
Mhm.
that. So things that us as agents kind of look at before we even go to the inspection table. So
Yeah.
Yeah, having a strong agent, knowing what to look for, to kind of get that proactive approach, I think is really
Mhm.
key. Then, getting you all excited, and then now we have a ton of hurdles. So I think the time that you're walking, you're already kind of figuring out, okay, this may be a good thing, this may be a challenge, this may be something that we can work on now if you really love this home, so we can get that clear pest, or like, the appraisal to go through, because we don't want like a ton of chipping stuff or or the patio's about to fall over. Like, those are things that
Yeah.
that may not be able to get the VA loan to go through.
Well, and I always think, like, remember too, like, the if you're on the buying side and selling side, is that an appraisal is just an opinion of value from an appraiser, right? Like,
Hmm.
literally, you would have two appraisers appraise the same home 2 different days, and you might get two different
Different
values,
answers.
right?
Yeah.
And two different perspectives. And it just depends on how thorough they are, how much they review things, and sometimes when the market changes, they get a little bit stingy and they might, it's just kind of weird, right? But I wouldn't ever get locked in on those things too and be too worried, right? Because I
Yeah,
feel like people look at them and they're like, oh my God, like, is it gonna work? And it's like, well, is it falling apart? Like,
exactly. The falling
it's gonna
apart
be
one is
okay.
is the different one. But if it's like little things, then that's fine.
Yeah,
Those are some things that we can even, like, okay, that just needs a little bit of touch
exactly.
up, a little bit of this. Oh, that wood is a little too close. We can just take out that one piece. Stuff like that. It's not that serious,
Exactly.
for those things. Like, if it's crazy, very visible, like it's unsafe, then those are the things I would worry about.
Yeah, if there's no flooring, right? Like, if the
Yeah.
if the windows are
You're gonna
missing.
fall down to the abyss,
Yeah, like, those are the things
or
that would be
the roof
concerning.
is falling down. Yeah, then those are
Yeah, yeah, but, like, easy
that may
things,
not
right?
go.
It should be
The easy
fine.
things, it's fine. Like, typically, it's just okay. You just need to remove that board, or stuff like
Mhm.
that. Make sure wood is not touching the structure. So,
Exactly.
for termites.
Yeah, for
Um,
termites.
but yeah, okay. Well, really great points. There's so much more that we can definitely talk about with a VA loan. So if you or anybody really planning to buy in the next year or so, drop it in the comments below. Would love to answer your questions. I know there is, quite a bit with the VA loan, which is all great things, really. And if you want to
Mhm.
save money, would love to help you and kind of like really maximize your benefit, because I don't think a lot of people know, like, even if when we go under contract, we can ask for discounts. Title can offer discounts. Like, having a really good
Yeah.
strong team on your side could definitely save you a lot of money.
Yeah, it's worth it. So, if you
Yeah.
are wondering, just reach out to anyone you know, preferably us, right? And then we would be able to run it for you and figure it out.
All right, well, everyone, have a wonderful day, and thank you for tuning in.
Okay, see you, you too.
Bye.
Bye.